Focus will be TCS. Govind Agarwal of Prabhudas Lilladher is with us now. Govind, hi, good morning. The stock has been an underperformer. Would you expect that to continue after Q1? And for Q1, what are you expecting?
Hi, good morning. We expect 4% growth in revenue in constant currency terms for TCS on a sequential basis. Cross currency will be positive in June quarter by about 30 basis points is what we built in for cross currency. So we expect dollar growth of 4.3%. Cross currency can even be higher than our estimates because of movement in the currency was quite volatile in the last few weeks. In terms of margins, we expect about 140 basis point sequential margin drop for the company, which is driven largely by the impact of wage hikes and visa cost which comes in Q1. So this quarter will be hit the margin trough for the company, and margin should improve from here. For the full year, the company's margin guidance on the EBIT front is 26 to 28% EBIT margin range. Company will hit the lower end or will be below the range in the current quarter, but for the full year we expect margins to come back going forward. On an outlook basis, I think TCS numbers should be good after I would say 2-3 quarters which were slightly lower than expectations. March quarter was, I would say, in line with expectations. Going forward, we expect about TCS stock to give about 10-12% returns on a 2-3 year long-term story.
Govind, hi, morning. The numbers could be good, but I guess good is not good enough because you have other companies that are outperforming TCS, the likes of Infy, etc. I want to ask you the comparison between TCS and Infy, but before that, what about the Brexit commentary? I'm sure the company would refer to that today. If they do, would the stock see any incremental negative, or do you think most of the Brexit worries are already priced in?
No, I would say Brexit worry is something market will watch out for, in the commentary of both TCS and Infosys is important over here. In terms of pure Brexit impact, Infosys has lower impact to Britain, while TCS has higher impact to British currency, around 13% exposure to British pound. So that commentary will be important because right now no one is very sure of how much the impact of Brexit could be. Also important would be to see the impact of Brexit on financial services. Will there be any impact on financial services because of Brexit? I would say that is something one would watch out for in both TCS and Infosys management commentary today and tomorrow.
Okay. And what's your expectation from Infy as well this time? And between TCS and Infosys, which stock do you think could outperform here on?
See, in terms of expectations for Infosys, we expect 4% growth in constant currency terms and about 4.1% growth in dollar terms, which is almost similar to what TCS we expect for TCS. In terms of margins, again, Infosys will have a margin impact because of wage hikes and visa cost. So I think for the quarter, we expect almost similar numbers for both Infosys and TCS. But on a one-year basis, we expect Infosys to outperform TCS, given the valuation discount. It is about 7% discount to TCS on FY18. And we expect slightly higher growth for Infosys in FY17. So I think we expect Infosys to outperform TCS by around 5% to 10% over the next 1 year.
Okay, so in that large cap IT among the top 5 names, what's your pecking order? Of course, you told us you prefer Infosys to TCS, but what's your overall pecking order? And in the mid cap space, is there anything that you like?
In the large cap space, Infosys is number 1, and then I would say number 2 will be TCS. But between the two we like Infosys more. And after these two, our preference will be HCL Technologies.
Okay, Govind, thanks for joining us and giving us a quick update on what to expect later from the TCS numbers. Infosys, the comparison between Infosys and TCS, of course, Infosys may continue to outperform TCS. That's the word coming in from Prabhudas Lilladher.